Training Central, Illinois. WHOW.
Top of the morning. Thanks for being with us. I'm your host today, Seth Lawrence. The WHOW Morning Show streams to Facebook and YouTube. Brought to you by Peterson Insurance, your Pekin Insurance agent in Clinton. My guest on the phone today is Jack Myers with Social Security. And Jack, always good to talk with you. Thanks for making time for us here for this morning.
Hey, my pleasure, Seth. Thanks for having me on.
Sure, definitely. Thanks for making time. Like I said, it's always good to have you on. And well, Jack, let's dive into it here for this morning. The ABLE program. I have to confess, I don't know that we have ever talked about this program, the ABLE program. What is this? And it sounds like an expansion. What's going on here, sir?
Yeah, so now ABLE itself is not directly related to Social Security. So what that stands for is it's the Achieving a Better Life Experience program. But the reason that I'm bringing it up today is kind of through the lens of our SSI program, the Supplemental Security Income Program. SSI benefits are needs-based. So, in order to qualify for benefits through SSI, if you're under age 65, you have to have a disability, but you also have to be financially in need. So you can only have so much income, and then there's also a pretty low asset limit. For an individual, it's $2,000. For a married couple, it's $3,000. So, in order to qualify for that SSI program, you really can't have a whole lot of money. Well, that's where the ABLE program comes into importance, because if you have money in one of these ABLE accounts, we can exclude up to $100,000 in an ABLE account, and you would still be eligible for SSI. And SSI is not the only program that can do that. There are a lot of other needs-based programs that a person with an ABLE account could still qualify for. So it's really a way, sometimes you'll see an individual, if they're under the age of 18 and they're wanting to apply for SSI through us, they may not be able to because their parental income, their parents' income and assets will have an impact on their eligibility. But then when they become an adult at age 18, even if they're still in mom and dad's household, we don't have to count mom and dad's income and assets against them. But if there's been money set aside for that child for when they get older, that money could impact eligibility and make them ineligible for SSI. Whereas if it was set aside in an ABLE account, it would not affect their eligibility for SSI. So it's pretty important there. There are a lot of other advantages to it. It can be tax-free growth, depending on what you use it for. There's a whole list of qualified disability expenses that are, pretty extensive that you can use the funds in an ABLE account for. And the expansion that you alluded to is pretty important, and it's something that just happened 1/1/26. So previously, in order to have an ABLE account, a person had to have become disabled before the age of 26. But what just changed 1/1/26 is ABLE account access is now expanded to those who become disabled prior to age 46. So a very significant change there, which now makes ABLE accounts available to a lot more people who become disabled a little later in life than what was previously required.
Sure. Gotcha. You said up to 20,000 can be attributed to an ABLE account in a year?
So that's what you can contribute to an ABLE account. Up to 100,000 is excludable for SSI benefits total in the account, but from a contribution basis on an annual basis, you can contribute up to $20,000 a year, potentially even more if the disabled individual is working. That, of course, would have its own set of ramifications on eligibility for SSI benefits. The work would, but just from an ABLE perspective, you can maybe even contribute more. Another nice thing about that contribution to an ABLE account is that other people can contribute money to an ABLE account for a person without affecting their SSI eligibility. So it really is a good option. Some people who are familiar with this sort of thing have looked into special needs trusts and things like that. And those are good options as well. but those are a lot more complicated. Those are tougher to set up. Usually you're going to, kind of have to go through an attorney to set something like that up. And then each one of those has to be reviewed by us very specifically to determine if it meets the criteria and the asset that's in that trust can be excluded. Able is a little easier for people to set up. And there are a lot of different ABLE accounts. So Illinois has ABLE accounts. So you go to illinoisable.com. You can find information about how to set up an Illinois ABLE account. But if you don't want to do one through Illinois, you could actually choose another state's program as well. So there are a lot of resources out there for ABLE accounts. I think a pretty good spot to start is that illinoisable.com, since we are here in Illinois. And you can get a lot of info there on how to create one of those ABLE accounts.
Sure, sure. This may take us a little deeper into the weeds, Jack, but with an ABLE account, when you go to utilize that money you've saved, is it taxed when it comes out or anything of that nature?
Well, so that's kind of the beauty of it. As long as the withdrawal is for a qualified disability expense, there would not be any taxation. So that's, the tax benefit, like the growth is tax-free, the withdrawal is tax-free, as long as you use it for a qualified disability expense. And that list is pretty extensive. It includes everything from day-to-day living expenses like grocery or rent to bigger expenses like assistive technology, vehicle adaptations. I was looking at the list. I also saw like housing, transportation. So, I mean, it's kind of all your big expenses could be classified as qualified disability expenses. It's not going to be, you can't take it out for a vacation and call that a qualified disability expense. But for most of your major life expenses, I think you'd probably find a way to be able to use that in a tax-free manner.
Sure, very good. Again, where do folks go to learn about that one, Jack?
A good spot is illinoisable.com, but you could also just Google ABLE accounts and find national sources of information on that as well.
Very good. Jack, where did anything on that we did not get to you want to put out there for us today?
No, just the main thing there. And also, I guess I'll just circle back one more time to the expansion, because if you've heard about ABLE accounts before and found that you weren't eligible because you became disabled after the age of 26, remember, effective 1/1/26, that eligibility has been expanded to people who became disabled prior to age 46. So if you became disabled prior to 46 and are interested in an ABLE account, you may now be eligible, whereas you wouldn't have been before.
Jack Myers, Social Security, my guest on the phone this morning. All right, Jack, let's talk a little bit about the continuing disability reviews. What are these? What do we need to know?
Yeah, so when people receive Social Security or supplemental security income disability benefits, we are required to review eligibility every once in a while. The Social Security Act requires us to review your case every so often to make sure that you still have a disability that prevents you from doing substantial work. And that review is called a medical continuing disability review, or CDR for short, because we love our abbreviations, acronyms. It's something that I want people to know about. Okay, I want you to know that this thing exists. I want you to know that it's going to come along at some point. And I also want you to know it's not your responsibility to initiate the CDR, but it is your responsibility to keep your mailing address and phone number up to date with us. And when we reach out to you for a CDR, it's important that you respond, because if you ignore it, you will lose your benefit. Okay, so what happens sometimes, Seth, is I think people get nervous by it because, these benefits are a lifeline for a lot of people. They're very important. When you get that kind of paperwork in the mail, it can be intimidating. Maybe it can create some anxiety that, oh, if I do this wrong, I'm going to lose my benefits. The worst thing you can do is just ignore it, because if you ignore it and don't respond, then we will have no choice other than to stop your benefits. So it is important that you respond to that paperwork. Just fill it out. Don't be nervous about it. It's not an indication that your benefits are going to stop. It is just a normal part of the process. And the timing of it is just kind of dependent upon how likely we determined medical improvement to be at the point that we approved your initial case. So there are some general guidelines. Sometimes we think, okay, if your condition is expected to improve, we might set a pretty short timeline, like 6 to 18 months for the first review. If we think it's possible that you will see some medical improvement, we might set it at about 3 years. If we think it's not very likely that you're going to see improvement, then we'd probably set it for around 7 years. But those, again, Seth, are just general guidelines. We don't always hit those, so we don't necessarily review you every 3 years or every 7 years. But just be aware that at some point in time, you will come due for that. Don't panic about it. Just fill it out, send it back to us. When you get it in the mail, there will be a way for you to do that update online if you prefer, or you can fill out the paper and send that back to us. Either way works for us. The online is really a great option if you want to do it that way, but if you want to do it on paper, that's fine too. And again, remember, just make sure you keep your address up to date with us. That's always important for a lot of different reasons if you're getting benefits from us, but it's especially important so that we know where to send this paperwork to you when the time comes.
Sure. Very good. Very good. A lot there, Jack. Did we miss anything you want to put out there for us?
No, I don't think so. I think that's the main stuff. Again, just reiterate, don't panic if you get that in the mail. It's not an indication that we're planning to stop your benefits. It's just a normal part of the process. The worst thing you can do is ignore it.
All right.
Just fill it out or do it online.
And where do folks go to find all of that?
You can find some information about the process at our website, ssa.gov. If once you've been selected for a review, you would see the ability to complete that within your My Social Security account. So you go to ssa.gov, create that My Social Security account, and then it's called a 454. That's the Medical Continuing Disability Review Report. But that won't be active within your My Social Security account unless you've been notified that you're selected for a review.
Very good. All right, Jack. Well, on that note, my friend, let's break and come back with some more. Jack Myers, Social Security, my guest on the phone. More to come with Jack on the WHOW Morning Show.
WHOW.
Once again, a good morning. Thanks for being with us. I'm your host today, Seth Lawrence. The WHOW Morning Show streams to Facebook and YouTube, brought to you by Peterson Insurance, your Pekin Insurance agent in Clinton. Again, my guest on the phone today, Jack Myers with Social Security. Jack, let's remind folks, Social Security cards, we don't need to carry those around. Always a good reminder. How about this to get us started?
Yep, that's for sure, Seth. We always say that your Social Security card is safer at home. Unfortunately, scams to steal your personal information continue to be problematic. You've got to make sure you're safeguarding your information, your personal documents like that Social Security card. There's really no reason for you to carry your Social Security card around with you on a daily basis. And that includes, and I'm talking to you fellas, that includes the little piece of paper in your wallet that has the number written down on it. That's just as bad. So get that out of there as well. We don't need that stuff with us on a daily basis, because what happens is, if you lose your wallet or you lose your purse, whatever the case may be, and that's in there, now whoever finds it or whoever steals it, if that's what happens, has documents like your driver's license probably, and your Social Security number, credit cards. So it's really a bad situation, and you really are opening yourself up to a lot of potential problems via identity theft. So there's no reason to have that there with you. Keep it at home, keep it in a safe spot. Very rarely are you going to be required to show that Social Security number. Typically it's going to be like, maybe if you're opening a new bank account or something, if you're applying for a job, usually just knowing the number is going to be enough. So don't carry that around with you on a daily basis. Make sure that you're keeping it somewhere safe. And also be careful when people ask you for that number. Don't be afraid to ask them why. I tell people all the time, it feels like you go somewhere and there's a form and it asks for your number because it's always asked for your number. But if you leave it blank, a lot of times they say, oh, that's okay, we don't really need it. So don't worry about asking. Say, hey, do you really need that? And they might say yes. And if they say yes, then you got to decide, do you want to give it to them or not? And they could refuse you whatever service you're looking for if they need it and you don't provide it. So that's something to be aware of. But don't be afraid to ask, is my point, because sometimes they say, nah, we don't really need it, and then you just didn't have to write it on that paper. So keep that card at home, keep it safe, and watch out for scams.
Very good. Yep, of course, scams always top of mind. Had just, in fact, one of our bank representatives in last week, Jack, to talk about some of the growing scams, and it's crazy. Those are out there. I'm sure we'll talk about that another time here as we move along. But this morning, Jack, let's wrap it up talking about the frequently asked questions segment of the Social Security website, which could probably save folks a phone call or even a visit to their local office. How about this?
Yeah, that's the hope, Seth. We want to make information available to people in ways that they can get to it easily. The website, ssa.gov, is a great source. The personal My Social Security account is a fabulous idea for people to set up. If you're 18 or older, get that thing set up today. You can do so much with it. You have access to so much with it. But one of the things that's really kind of helpful there on the website is that frequently asked question page. So if you navigate directly to it, or if you want to navigate directly to it, you can go to ssa.gov/FAQ for frequently asked questions. And there you will find, right at the top of that page, kind of a list of all the hot topics right now. So, what's kind of top of mind, what's important right now, this time of year. You'll see all of those questions, but then there will also be a grouping by topic. So we've got right now on there, we've got topics like Social Security number, online services, retirement, Medicare, My Social Security, spouses, children, survivors, disability benefits, your Social Security payments, SSI benefits, and then just generally others. So a lot of good info there on the FAQ pages. And something that I always like to emphasize for folks is there's a lot of info out there. I kind of joke that Social Security is common fodder for coffee shop talk, right? There's always people sitting around talking about Social Security, and while they mean well, their situation may not be the same as your situation. So what they know about Social Security may not directly correlate to you. So it's important to come to the source to get the right information for you. And this FAQ page, ssa.gov/FAQ, is a good way to do that. You can get good info. If you want to dive a little deeper on any of those subjects, we also have a whole portion of our webpage dedicated to publications. So if you go to ssa.gov/pubs, you can get all the pamphlets on different things. And those pamphlets you can download them in PDF. You can actually ask for one to be sent to you. You can listen to a lot of them via audio right there on the website. So a lot of good ways to absorb that information in the publication section as well.
Sure. Very good. Hey, Jack, I want to put this question. You always give me a plethora of notes here, and one of the questions you have is a good one, and I think it's worth addressing. Somebody may have retired. They're in day what is this, day 8 or so of retirement, and it's possible in a month or two their employer may not be able to replace them, or they find the replacement pool is not what they thought it would be. And so maybe they offer that individual their job back. However, that person may be drawing their Social Security retirement and things of that nature. Can that be undone? And can they return to work and maybe increase their benefit? How about that?
Yeah, so that's a great question, Seth. And the answer is yes, it can. But there are some limitations. So essentially, you kind of look at this like a do-over, right? You made the best choice you could at the time, given the information you had, but maybe the employer, like you said, found that, this person's not going to be as easy to replace as we thought, and they sweeten the deal for you, and they want you to come back. Or maybe you decide retirement's not for me just yet. So you can withdraw your retirement application. In order to do that, you can only do it one time in your lifetime, and you have to do it within 12 months of starting your retirement benefits. You also would have to pay back any retirement benefits that you had received from us. So it's like a complete wiping clean of the slate, like you never did it. And then down the road, when you decide you really do want to retire, you would just start over. You would file for retirement again, and it would be like you had never done it. So it is a fresh start, a clean slate. It is a withdrawal. You can initiate that online at ssa.gov, or you could call us and we could talk you through how to do it, 800-772-1213. But again, one time, and it has to be within the first 12 months of starting you to receive your retirement benefit.
Sounds good. Hey, Jack, it's always good to have you on the program, my friend. Looking forward to another year of chats with you here this year. Thanks for doing this with us as always.
My pleasure. Thanks for having me, Seth.
That is Jack Myers, Social Security, my guest on the phone. Network News comes your way next. The morning show streams to Facebook and YouTube, brought to you by Peterson Insurance, your Pekin Insurance agent in Clinton. Again, Network News on the way on the WHOW Morning Show.
WHOW.